Hello everyone, welcome back to the best stock market channel on YouTube. I'm your host, Hamid Trades. In today's video, we're going to be talking about the SPY, the NASDAQ, the IWM. We're going to try to figure out whether this move to the upside is going to sustain itself. Is this a new bull run or is this just short covering? So in today's video, we're going to take a look at all of that stuff. Please make sure to like, comment, subscribe, put on the bell notifications if you guys enjoy the videos. Thank you guys for your support. And let's get started with the video. All right, so hindsight is 2020. So basically, this is a chart of NVIDIA. And what I want to do is I want to show you guys basically what I think stocks that are basically going to be moving the market. So yesterday we saw that NVIDIA was trading outside. It opened and closed outside of the lower level of the Bollinger Band. And we know that if this happens on the SPY, the NASDAQ, the IWM, usually this denotes very extreme oversold condition and usually leads to a bounce. So that's exactly what happened with NVIDIA. Hindsight 2020, 2 days ago, tax loss selling also ended. So with tax loss selling ending, NVIDIA being very overextended to the downside technically gave a good opportunity for a bounce, in my opinion. Same concept with Tesla. Tesla, extreme selling. Yesterday was the first green day that we had, similar to NVIDIA. Both printed green candles, right? And if you remember in yesterday's video also, we were taking a look at the bonds. So the 30-year bonds were also very overextended to the downside. And obviously today we had a green day. And not only that, we opened outside of the lower level of the Bollinger Bands on the bonds, which is also very bullish. Basically, it means there's a very high likelihood chance that we're going to get a bounce. So now moving forward, we have to remember and remind ourselves for all of these things moving forward that this would be a good opportunity to go long. We could have easily went long yesterday at the close, but I wanted to be a bit more risk averse. Honestly, I didn't want to, take any unneeded risks into the end of the year. I just wanted to sit back and see how things played out on a day-to-day level. But, things really things were very obvious, but we just didn't take a stab at the plays. So now moving forward next year when this happens, towards the end of the year with tax loss selling and everything like that, we have to take that into consideration. Okay, guys? So yeah, there's that for everything. Let's take a look at the SPY. So basically, obviously, we're still trading within this range. The only thing that immediately come to mind here is the lower level of the Bollinger Band is starting to not vomit to the downside, which is a good sign. It usually means that if this move to the upside can continue, the Bollinger Band is going to flatten out and then eventually start moving upwards as well. And basically, if the Bollinger Band, the lower level of the Bollinger Band ends up basically over here, potentially. It ends up at 376. Then it basically means that there's less room to the downside. And it's bullish. Okay, so but in general, I think that this is purely based off of short covering. I would be very surprised if we end up breaking above 388, just straight from this green candle here. Of course, it could happen. Today, we saw a lot of buying pressure all throughout the day. We saw, even as the buyers got tired around 11 or 12 p.m., I was focused on shorting because I saw that the strength was not really it wasn't actual strength. It didn't seem like the strength could sustain itself. So we kept shorting and, we made plays. They worked out, but we didn't get a big fall to the downside because buyers were still there to make sure that it didn't fall. But what I'm saying is we didn't see, if this was a genuine move, right? If this was extreme strength, a very strong relief rally, everything like that, we would have easily blown past 385, 386. That didn't happen. So because that didn't happen, it's making me second guess whether or not we can by tomorrow, whether or not we can break above 387. If we do, right, the only thing that I think will give us an opportunity to go up. So there's two things. Either we just gap up in the after hours. That's completely irrelevant. We can't really do much about that. The other thing is if tomorrow we hold 382. If we can hold 382, create a base at 382, 381.50, 382, and then bounce off of that, that could end up giving enough momentum to the upside and giving us a retest of at least 386, 387. That would be very interesting. But then if we start breaking below 381 and 380, then we're going to fall back down. But, you know, essentially right now we're still trading within this range. There's not really much else to look at. And it was primarily, in my opinion, this bounce was due to Nvidia, Tesla, the bonds, and tax loss selling. So there's that. When we take a look at the IWM, you can see that the IWM looks very similar relative to the SPY, still trading within a range. Very, very simple. The upper level of the range is 177. The lower level of the range is 170. Very simple, right? The NASDAQ paints a very different picture. NASDAQ is much weaker. So you can see that even if we do bounce here, right? Like zooming out, when you're taking a look at the chart of the NASDAQ, there are many different levels of resistance all throughout to the upside that the NASDAQ needs to breach for us to become bullish again. And bears are going to be looking for these levels to go short. So it's going to be very interesting. It's going to, like, if this move to the upside is going to sustain itself, great. But are these bounces just other opportunities to go short and to average into more puts? In my opinion, for the longer term, for 2023 into 2024, I do believe that the market is going to be much, much lower. So any of these pops and everything like that, if we end up breaking above, first of all, the upper level of this range where this move started to really start falling was 278. The NASDAQ needs to reclaim 278 and start bouncing back above for us to even think that we're bullish. That is a long ways away. And not only that, then there's 273. So 273 and 277 are very, very major levels of resistance on the NASDAQ that we have yet to even come close to. So, yeah, and then those levels just become very perfect technical shorting opportunities. So, yeah, especially if basically within the first 3 quarters of 2023, if people are baking in a recession. The fact that 2023 is going to be a very, very crazy year. We had a recession and a big drawdown in 2020. We had, and potentially we're going to have another recession in 2023 where stocks are going to plummet even more. So there's going to be a lot of opportunity heading into 2023 to the long side and to the short side. So yeah, in general, it makes sense to scale into longer term puts for 2024. Very, very easy in my opinion. High quality trade setup. I'm not a financial advisor. There's some financial advice. But immediately that's really it for the indices. When we're taking a look at the bonds, we already took a look at the bonds, and we know that if the bonds are showing strength, then it usually means that there's strength in the overall market as well. And now we just need to see if this move continues itself. There's not really much else to look at in terms of the bonds. The dollar obviously fell, right? So the dollar, we know, generally has an inverse relationship to the overall market. So if the dollar is falling, then the market should be bouncing. That's exactly what happened today, thankfully. And last but not least, we could just take a look at the VIX. The VIX didn't really do much, stagnating here. And yeah, I'm just very excited to see how the end of the year ends. I'm just very, very excited to see how the beginning of the year is going to start as well. Like, there's a lot of questions still left. 2023 is undoubtedly going to be one of the most historic years in the stock market to date. The Fed, the housing markets, the interest rates, inflation, there's a lot. So it's like you really, really, really want to be focused on the stock market during 2023, because the lessons that we're going to learn during 2023 are we're going to be able to apply those lessons decades down the line. And I think next year is going to be invaluable experience in the stock market, especially for people that just joined and started following the stock market in 2020. Do not miss 2023, because everything that you learned moving forward, like from 2020 to today, in 2023, you're going to be able to apply those things. So, you know, there's going to be huge opportunities where big capitulation happens. The Fed is going to step in. You're going to understand what it means. Oh, the Fed is printing money. Okay, that makes sense. I should start going more. Sorry, I gotta sneeze. Sorry, what was I saying? I was saying the Fed. If the Fed starts printing money in 2023, you know that means just to start buying calls, and that came because you've been following the market for the past few years. So, very excited to see how this plays out. I'm very excited to see how we all do. We're gonna end tomorrow. Tomorrow is gonna be the last trading day of the year. We're going to end that with a bang. We're gonna do very, very well. We're gonna start next year with a bang, and I'm very, very excited. So once again, if you guys enjoyed today's video, make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you guys.